One of the most popular questions I get is, Akil, should we hold our trades over the weekend? And in most cases, I would say yes. If you're a swing trader, you have to. However, this is one of those weekends where you probably don't want to have any exposure in the currency markets. Hey traders, welcome back. If you guys are new, my name is Akil Stokes. I'm a Forex trader and a trading coach over at tradingpower.com. And welcome to the Forex market preview video. Typically this video comes out on Sundays. However, I wanted to bring you this video a little bit early this week because, well, I'm going to be loaning you some advice on how to handle your trading over the weekend. And well, I guess it just wouldn't do you any good if you heard this advice after the weekend already got on its way. Now, I want to start off by showing you a trading opportunity that we looked at in our Syndicate program earlier in the week. Then we're going to come back to it and we're going to talk about how to manage it over what could be a very interesting and explosive weekend in the currency markets. So check out this brief video clip from our Syndicate and I'll be back in a little bit. Next, let's head over to Euro Yen. Euro Yen is a pretty decent opportunity right here. I actually published this on TradingView this morning, but this is something that we've been working on in our Transformation Strategy Lab. We started about 2 weeks ago talking about trend continuation trading and really something that I stumbled upon about the double overbought and oversold conditions. And Euro Yen has been a very nice pair for us recently. The yen pairs in general, we've been able to catch, or I've been able to catch some pretty decent trend trading moves on the yen. And now we're starting to see a little bit of relief, meaning we're starting to see that bearish momentum slow down. We're starting to see the bulls regain control for a little bit before price comes up to a point that's cheap enough for the bears to want to get involved again. And for me, that point is going to be this kill zone right here. It looks a little bit clearer on the daily, I believe. Maybe not. Doesn't look clear. It doesn't look clear at all in the daily. But this is my potential reversal zone. This area right here between 117.27s and about 118.76. So it's a big zone. We have a nice little red line in here as well. Previous level of support right in the middle, about 118.25. But that's where I'm looking for price action to potentially reverse at. And what happens is we have come from. I'll go and delete this stuff and kind of draw it over for you guys. We have come from a level of an extreme. So the RSI has gone oversold at this level. We've passed the 80 mark on my RSI indicator, right? And we've rallied all the way up to another extreme. Price action has now gone overbought. So we've gone straight from oversold condition to an overbought condition, and we're right in that kill zone as well. Now, for you guys that are Fibonacci traders, we can take our Fibonacci and extension tool, invert it from our previous swing low, right, to our previous swing high. We're going to get a 1618, a little bit higher up here, 117.58. And if we take a Fibonacci retracement from our larger swing high to swing low, so this entire move here, right, we're going to get a 382 a little bit higher as well. You see both those Fibonacci, they don't line up with each other, but they're both in that kill zone, that potential reversal zone that we're looking for. So this is a pair that is heavy on my radar. You can treat it like a trend continuation trade. We talked about this this Monday Strategy Lab, where if you're aggressive, just be prepared that you may need to enter the trade twice. Meaning if you enter this on, say, a lower low, lower close and you get skunked out, you may have to enter again at a higher point, and that's okay. You're still going to have the risk reward to make that work as long as you're doing it consistently. But this is going to be on our radar probably throughout the rest of this week, maybe even next week, depending on how much price moves for a potential short. Now, we do have, I believe Carney is speaking today at 10:30. Let me just bring over my Forex factory. All right, so we're back here on the Euro Yen. I went down to a little bit of a lower time frame, down to an hourly time frame. You can see that price action came back to this level, and we reversed right to the most conservative level of profit, which was a retest of our previous structure right here. Again, look left, structure leaves clues, look even lefter, structure leaves more clues, look even leftist, structure even leaves more clues. And we're at a point right now where it's Friday afternoon, or yeah, just turned 12 o'clock actually, Friday afternoon, and the markets are pretty much done for the week. The London session has closed up about an hour ago, so they're most likely in the pub somewhere, and no one's really trading the New York session. Our traders are having kind of a lunch hangover and getting ready for happy hour here. So I don't expect too much movement in the markets for the rest of the day. Now, what could be very explosive is the movement that we see over the weekend. And typically we don't see any movement over the weekend. People think the markets are closed over the weekend. That's a myth. The Forex markets are technically open, just retail brokers aren't open. So therefore retail traders cannot trade, but you can still execute, not you, but traders can still execute trades over the weekend. And that's why we sometimes see gaps in the market. And a gap in the market is something like this, where price action may close right here on Friday, and then you come back on Sunday and magically there's a gap and the first candle begins up here, and you're freaking out and saying, what's wrong with my chart? Am I missing data? No, the market just traded. Just your market wasn't able to, or you weren't able to trade it on your price charts. And this is one of those weekends where there's a high likelihood of there being a gap in the market because of the French elections. There's I think a preliminary round of French elections coming up on Sunday, and well, depending on who is voted in or who is not voted in, there could be some very heavy Brexit considerations in the process, or as a result, I guess you can say. So the market is expected to move drastically, all depending on who is elected or who is not elected. And what you don't want to do is you don't want to put yourself in a position where you can be exposed to that. Typically there's a slightly different mindset between experienced traders and underexperienced traders. Experienced traders, our number one rule is to conserve capital. How can I not put myself at risk of losing money? And especially in a trade like this that has already come down to hit some of your preliminary target levels, the goal is not to give any money back. And you may say that, well, Akil, what if I managed my position? What if I took my stop loss from up here? And what if I rolled it down to break even? If the market gaps, wouldn't I just be taken out for break even? And that's not the case. Unfortunately, when you put orders in for trading, those orders aren't guaranteed. So just because you have a stop order in or a limit order in doesn't guarantee that you'll be filled at that order. It's simply a placeholder. It's simply you saying, hey, this is where I would like to get out, or this is where I would like to get in. And when your broker gets to it, that's what happens. If we were to have a situation where price action gaps, let's say up to here over the weekend, right? Well, even though your stop loss was right here at break even, you would be filled at whatever the opening is, and you have a chance to take a loss. And what that means is that you are giving money back to the market. And again, a number one rule is once we make money, once we extract profit from the markets and put it in our pockets, we never ever want to give it back. And that's kind of the difference in mindset. We have that mindset of not giving money back, where some of the underexperienced traders have the mindset of trying to make more and more money, getting greedy with targets. And in the process of doing that, they give a lot of money back to the market. So in this particular weekend, I would just exit your trade out at market. I had a pound yen trade that I took earlier in the week, and I did the exact same thing with that. It was a similar trade. It was a double top, more of a counter trend trade. This is more of a trend continuation trade. But the trade right now is about 45 pips, and I'm going to exit it as soon as I finish this video and take my money, because I don't want to have any chance of giving that back to the market. Yes, it doesn't hit the initial profit targets that I was looking for. I'm probably still about 100 pips away. But again, in this situation, this is a particular situation. I never encourage taking targets early, but in this particular situation, this is one where you're better off just having zero exposure to the market. And understand, guys, this comes from my experiences in the market. You know, I've never claimed to be the best trader in the world. For you guys that have followed me for years now, I've been doing this for 5 years. One of the things that you like the most about me is that I'm fully transparent. I'm fully honest with you. I am someone that has brought myself up from knowing very little about trading and has turned himself into a consistently profitable trader. However, in that journey, I learned a lot of lessons, a lot of very expensive lessons, I guess you can say. And, you know, making mistakes isn't a bad thing, I guess you can say. Making mistakes isn't a bad thing as long as you're learning from them. The trader that makes a mistake and goes back to continuing to do those bad habits, those are the ones that get into trouble. A trader that makes mistakes and learns from it, well, it stinks that you're making mistakes. It stinks that those mistakes typically cost you money, but it's kind of like paying your dues to the market. It costs money, right? It costs money. Just as it costs money to get educated in the market, it costs money to learn from the school of hard knocks in the market. So either way, you're paying something to gain experience, and you know, hopefully if you stick with it and if you're dedicated, you'll make a lot more based off what you learned from those lessons than what you paid to learn them. But that's one of the reasons that I think I've become such a good coach, is just, you know, my ability to kind of connect with the issues that you guys are going through. I've made almost every mistake in the book and I've learned from it. So when I work with traders, you know, one of the best assets that I have is really just telling them what they have to look forward to, sharing my journey and saying, hey, this is where I messed up. You may want to do this, so you don't fall into the same trap that I did. And many traders still fall into that same trap, but at least you know, at least you're prepared for it. And, you know, for you guys that are interested in training courses, we still have that promo going on. You can see here, if you go to tradeempowered.com/taxes suck, or look in the description box of this video, we've got a 25% off everything sale going on for, as of right now, the next 11 hours. By the time you see this video, it will probably be less. But if you're on the fence, if you're someone that's on the fence about getting coached up, getting involved in a training course, or maybe getting an indicator that will help make your trading life easier, or joining a trading community where you can spend time with like-minded individuals and have that support, which is crucial to becoming a good trader, time is running out. So you may want to check it out while you're having these 25% discounts. But let me get this video out to you. Hopefully it reaches you before the market closes. But again, I never am a advisor of closing swing trades out over the weekend or taking profits early. That's a bad habit that can sabotage your trading in the long run. However, this is one of those unique scenarios where you're better off being safe than sorry. In worst case scenario, if we don't get any gap over the weekend, you can always re-enter the trade at market and put yourself back in the same position. So I will see you guys Monday for you guys that are transformation students in our strategy lab. I'll see you guys Tuesday in the Syndicate and in the live trading room. And I'll see the rest of you guys next time I decide to put something on YouTube. Until then, plan your trade your plan, be safe in the markets, and I hope you guys have a great weekend. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.